you to the first episode of Monthly Commodity Market Update July 2020. This is a presentation by Bangladesh at a Glance Bhag. I am Abdullah Faisal, the chief contributor, Bangladesh at a Glance. Commodity market is going through a major challenge from the ongoing trade war between USA and China, and COVID-19 scenario make it in worsening level. But as the lockdown has been lifted from many countries, commodity market seems some positive growth month over month, but will take time to bounce back to pre-COVID level. As a net importer country, soft commodity price is good for our economy and vice versa. So, why I have chosen these topics, commodity market. First of all, I want to talk about from the manufacturer perspective. To follow global commodity price is very important from the manufacturer perspective as cost of goods sold come from this segment. When a manufacturer can reduce cost of goods sold, gross margin goes up so as net income. When net income of the companies goes up, then EPS will goes up, which is a benchmark for stock valuation. So from an investor perspective, investor of capital market, investor of venture capital or private equity investors follow EPS, sales growth, cost, gross margin. So all these things related to commodity market. Next, I want to talk about from the consumer perspective. We as a nation deprive of lower commodity price, but have to bear when price rises. Say for example, nowadays, well price is in a very in is bottom bottom line, but we as a nation cannot enjoy a lower price of well. Consumer Protection Act 2009 failed to protect consumers. To build an award consumer class, we need to know about the global commodity market. From investment product perspective, earnings opportunity for investor by a derivative instrument such as future contract is quite known in developed market. From government perspective to regulate market properly and to make a very good and stable market and market oriented market uh, commodity market or commodity price need to be scrutinized. Okay, first of all, I'm talking about energy product. Demand for crude oil is largely driven by economic activity. Higher the economic activity, higher the demand for crude oil. Likewise, demand for crude oil falls during time of recession. When COVID attacks the whole world, the price of oil goes below zero in future market. Holding well has no value on that time because everyone was feared of recession. So as economic activity goes down, well price goes down as well. We can see from this chart the year over year return from Brent crude oil was negative 33.1%. But in the last 1 month, Brent crude price goes up by 6.7% as we have already informed you that most of the countries has lifted lockdown, so the price of crude oil goes up as the economic activity goes up. Geopolitical conflict in well producing countries or disruptions of well supply routes are supply risks to crude oil. So, for an example, when Aramco was attacked last year, then there was a disruption of oil supply and the oil price goes up. There are so many geopolitical conflicts which need to be scrutinized every time to make our country profitable from Brent crude. Next, I'm talking about liquefied natural gas or LNG. LNG is a recent import item for our country as government has poured LNG into our gas uh, pipeline. LNG demands dynamics are similar to crude oil. Economic activity, seasonal heating or cooling requirement drives its demands, whereas supply disruption from natural gas producers remain a supply side risks. If we look at this chart, the year over year return from LNG was negative 11.4%, and only in the last month LNG price dropped by 11%. We already informed you that there is a correlation between there is a positive correlation actually between LNG and crude oil. When crude oil price goes up, LNG price also goes up as a supplementary product. Next, we are talking about grains. Supply can be affected by weather condition, pest, and disease. These factors determine the quality and quantity of crop produce. Grains are consumed as food for human and livestock. So, first grain we are talking about is wheat price. The year over year return from wheat price was 1.1%, and in last 1 month there was no changes in price of wheat. So as there were economic slowdown, but wheat price do not go down because of what? Because this is a consumer goods. People need to take it. People cannot live without taking this sort of food. Next, we are talking about sugar. Sugar price fall 5.7% year over year. But the most important thing to be noticed here, from July to September, we see that sugar price was its higher level, but recently it goes down year over year. But what's the main reason behind that? The one thing, people are much more aware in taking foods. Sugar has so many negative effects on health, so people may avoid sugar, and for that particular reason, from demand side, sugar price is going down year over year. Sugar was a soft or cash crop. Cash crop include cotton, coffee, sugar, cocoa. Demand is driven basically by economic activity and consumer wealth. So when economic activity goes up, the demand also goes up. So from here we can see that there were 9.3% degrowth of cotton price year over year, but in the last 1 month it sees positive growth of 1.1%, because we can see from Bangladesh perspective, in April May our garments was not totally functional, but now on we are completely functioning our RMG and textile sector. So we have higher demand of cotton. As we have higher demand, the price of cotton also goes up, but it will take some time to go back to normal level. The interesting fact we are talking about is the copra price. Basically here we are talking about coconut price. This data is taken from World Bank. uh, Last year in the copra price increases 35.1% year over year. But you may be astonished how this can be happening. From this chart we can see that in From June 2018 to November 2019, copra price was in its bottom due to huge production by Thailand, Indonesia. But after the price reduction, they come up with a solution to reduce their production. So the price of copra goes up this year, but there were 3.4% month over month negative return because of the uh, low demand of copra. Now we are talking about industrial base metal. They are used in industrial production and manufacture of various goods. Demand is directly impacted by economic activity and infrastructure development. So we can see as the economic activity goes down, year over year return from aluminium goes down by 8.5%. But after the lockdown has lifted, then the month over month return is 4.8%. So that means construction or economic activity is going up, so as the price of aluminium. Next, we are talking about zinc. Year over year return was negative 11%, but month over month the price of the zinc goes up by 7.5. Next, we are talking about iron ore, which is also an industrial base metal. The price of iron ore goes down by 9.7% year over year and increases by 5.1% in last 1 month, month over month. Same explanation will be goes to this as the economic activity and construction activity goes up, so as the demand, so as the price of the iron ore. Cement and clinker is a basic material of construction. In last 1 year the price was 3.9%. The price in witness 3.9% negative growth, but in the last 1 month the price goes up by 8.1%. So this is very interesting to know. Whenever we are talking about cement and clinkers, we basically import it from Vietnam, so we take this information from Vietnam customs. Next, we are talking about gold price. Gold price increases 30.7% year over year, and gold price is in highest ever price in its history, and in last 1 month it has increases by 6.6% month over month. So why gold price increases? Gold is a precious metal. During time of economic uncertainty, investors rush to precious metal as store of value. High inflation in paper currency causes value of precious metal to increase as they serve as an alternative form of money. Precious metal act as an inflationary hedge. So when economy goes with an uncertainty, gold price increases. We can see from January 19 gold price start to peak, start to go up because of the trade war between America and China. After that, the price of gold is going up day by day, and COVID-19 fuel its price against with uncertainty, and now is in highest level in any time. We have to look how many days gold price will be stable. I think without containing COVID-19 and without having a peaceful environment globally, gold price will be in this level. But if one of these uncertainty goes down, goes up, then I think the price will go down. We have to look at some other major commodities. Tea price goes up 16.1% year over year, so it's a bad news for tea consumers. Palm oil price also goes up by 27.6%. Soybean oil, which has gone up by 9.7% year over year. But good news for the barley demanders, as price has gone down by 46.2%. Uh, Bad news for the rice consumer, as rice price goes up 14.2%. But also important thing is that month over month it has gone down by 6.8%. After the infections of COVID-19, demand for fruits goes up. So as the orange price goes up 21.7% year over year, and last 1 month it has gone up by 1.7%. Beef price increases 1.5% year over year, whereas decreases 7.8% in month over month. Chicken meat goes up by 23.9%, whereas it goes down by 3.3% in month over month in just this month. Shrimp price goes down by 3.3% year over year, and tobacco price goes up by 0.6% year over year. Thank you for being with us. Please follow Bangladesh at a glance bug on Facebook, YouTube, and LinkedIn. Thank you all. Allah Hafiz. Good night.